A brutal stock sell-off around the globe. Influential venture capitalist Bill Gurley tells us what's at stake for tech investors. I'm Brad Stone in for Emily Chang, and this is Bloomberg West. Coming up, what's keeping Bill Gurley up at night, and how the epic stock downturn may impact valuations and business models. Plus, how investor fear may influence Silicon Valley's latest unicorn, ZocDoc. I'll speak to the company's CEO. And eSports go mainstream. I'll be joined by the video game executive behind the tournament, which sold out New York's Madison Square Garden this weekend. All that ahead on Bloomberg West. Now to our lead. Epic stock selling across the globe. Wall Street is seeing its biggest weekly losses in 4 years, and technology is getting hit hard. The five giants, Google, Amazon, Netflix, and Facebook, were tumbling today, and Apple is entering a bear market. And the NASDAQ 100 index extending its biggest two-day drop since 2008. Silicon Valley investors fear that private tech companies may face a similar fate. In a so-called tweet storm last night, Benchmark Capital's Bill Gurley warned unicorn CEOs to prepare for tough times ahead. I sat down with Bill today to get his response to the sell-off.
I think we're seeing a sentiment shift, right? We've been, for the past 12 months, if you were to judge, if you would say, have internet investors been optimistic or pessimistic or where they are on that scale, I would argue they've been, kind of pegged to the right rail, especially in the late stage private market. And so whenever you're there, there's only one way to go, which is down. And now, whether it's the Chinese economy or whether the Fed's going to raise rates or any of these things that raise questions, they cause that sentiment to drift back towards the center.
Okay, but, if the negativity is around the Chinese economy or even oil prices, tied to the glutton international supply. You tweeted, you had 8 tweets last night talking about the impact in Silicon Valley. Why do those macro doubts, that macro fear, why does that necessarily mean that the sentiment, which has been optimistic in Silicon Valley, changes?
Well, two things. So one, returns in venture community or Silicon Valley have always been highly correlated with the NASDAQ, at least when everyone used to list on the NASDAQ. Like, if you just go back and chart it, like there's just a huge correlation. The output of products in Silicon Valley is to take them public and how those public companies perform. Like we create companies and that's the buyer of companies. And so there's a huge correlation. So that's one. Two, the incremental price setter in the late stage private market has increasingly become the mutual fund buyer that has reached down a class from where they used to invest. And so they're setting prices. And if they're getting their ass kicked every day in the public markets, it's highly likely to affect how optimistic they are about their other activities. And just because the private companies don't trade every day doesn't mean the values aren't falling in line with the others.
Although it
may feel that way.
It does seem like a lesson for the past couple of years is that there does seem to be this inexhaustible supply of capital from private equity, from international. Later in the show, we're talking to the ZocDoc CEO. They just raised money from 2 European funds. Yeah. I mean, maybe if the public markets are looking poor, maybe this continues to be a source of light.
I'd be surprised. I would be surprised just because these people are working out of similar pools of capital. But you could be right. I'm making a bet that that's probably not right. And the other thing that I would say is, and one of the reasons that I'm sounding this alarm is every entrepreneur is forced to play the game on the field. And the game on the field for the past 4 years has been capital's free,
growth,
get as much as you can and grow at all costs. What that does is it increases risk on the company because they take their burn rates up. And if it shifts, if the game on the field shifts, if capital gets more expensive and it's not free, then you've got to shift. And so, you can rest assured that the message I brought to Twitter last night is one I've been sounding internally to our companies for over a year now. And I just want them to be ready.
Right. So you asked on Twitter, rhetorically perhaps, which CEOs and entrepreneurs of unicorn companies are ready to make this shift, to move perhaps quickly to profitability instead of growth. And let me ask you then to answer that question. Are they the CEOs that have been through other business cycles, who are very good at listening to outside impact?
Yes, certainly. Anyone that went through 09 or 99 Like, that's the best learning you can have possibly for this. And, I kind of think of '09 as a speed bump. And quite frankly, I took huge value out of the Sequoia Rip Good Times PowerPoint because it did educate the community very quickly. And I can remember, coming into board meetings in '09 where the CEO and entrepreneur have already decided to do a headcount reduction because it was obvious that was the hard medicine that needed to be taken. Much different from '99.
But arguably for only 2 years, and then it was very quickly a reacceleration.
Yeah, but the companies that did that quickly didn't have catastrophic events. We've already seen in the past 3 months, the good eggs, the home joy, we're starting to see catastrophic events, and we haven't even seen the shift in the capital markets yet, right? And so, and those companies have $50 million each. How do you burn off $50 million in an early stage company? Only if you're taking excess risk.
Well, some of these late stage companies are, obviously growing at astronomical rates. One is in your portfolio, Uber. Airbnb is another. They're trying to achieve global network effects. They're investing incredibly overseas.
Yep.
I mean, what does changing gears look like for some of these late stage unicorns?
Well, so
can they even do it?
I would speak broadly about the companies that we work with. I encourage everyone to constantly do scenario plans and to have, here's the forecast, here's the path we're on. If the capital markets shift, here's where we're going to shift. And have you built that financial model? Do you know what it's going to look like? Do you know what measures you're going to take? And so you basically scenario plan. You have multiple paths.
So you want them to look at what happens when investors look for growth instead of profitability. If that does come to pass, what happens in Silicon Valley? What do lean times look like here?
It's going to be different for different companies because different companies have taken on more risk. There are people who I think are more conservative that could shift to a profitable model and bring down growth fairly easily because they're more pragmatic, they're more experienced, they've lived through this in the past. There are some, probably the younger you are, the more likely you are to be at risk because you've learned everything from the past.
You're trying to follow in the path.
And maybe your board's young or your investors are young and they haven't seen it. They say experience comes from good judgment, or good judgment comes from experience, which comes from bad judgment. If you've learned, you don't have this problem.
And there are some public companies like Amazon that actually do continue to be valued for growth instead of profitability. I mean, what's the lesson there for some of these late-stage internet?
Yeah, but there have been times in the past where Amazon has lost the trust of Wall Street, and you've written a lot about it, and then, Bezos and team have had to show profitability and earn that trust back. And so they've played this game over time, but every once in a while they say, you don't believe this can contribute cash flow? Boom, it contributes cash flow. And they are also nowhere near a situation as they have been in the past where their cash is an issue.
Well,
and so many of these startups, they could run out of cash. I mean, that's really what happened at HomeJoy and Good Eggs. They ran out of cash.
And arguably they had flawed models, but
sure.
Yeah. If you're a company like Square in the IPO pipeline, what does the sell-off mean for you?
I don't know Square's financials. I think if you have good financials and you are ready to go public, you've taken all the steps, you're hitting your quarterly numbers, I don't think it matters. Like, the window's always open for good companies. We took OpenTable out in '09. I think we were the first company out after the crisis, and it's fine. Like, to a certain extent, you want your stock to go up over time. Going out in a peak market just increases the likelihood that it's going to come down. It's a long journey.
That was Benchmark Capital's Bill Gurley. Now Morgan Creek Capital CEO Mark Yusko joins me now to break down Bill Gurley's comments. He's with us from Notre Dame University. Mark, thanks for joining us.
Thanks for having me. Good to be with you this afternoon.
Is Gurley right? Did the tremors in the capital markets create an earthquake in Silicon Valley?
I don't know that it's a full-on earthquake, but clearly there'll be a tremor. And I think he's right, very similar to the 2000-2001 period. And just for reference, I did retweet Bill's comments last night on Twitter as well, so I think he's right on.
Well, you're observing this entrepreneurial environment from afar. Do you think Silicon Valley is prepared for a dramatic shift in psychology, or are we going to see something like 2000 where it really took a lot of companies and entrepreneurs by surprise?
I think they're much more prepared. In fact, I apologize. I might look a little scruffy today because I flew in from Silicon Valley last night, overnight. But, I spent some time with people out there, and I think the difference between then and now is not as many companies have gone public. Back then, there were 10,000 companies that had gone public in the previous 5 years. There just weren't 10,000 good management teams. And Bill's exactly right. It's all about the management teams. Who knows how to control risk? So I think we are in much better shape this time than last.
So quickly, what happens on Sunday in the Asian markets and Monday here in the United States? How far do you think this pessimism will keep directing the markets?
Well, hopefully a few people come back from vacation and we can get some of the humans back in charge of the market rather than the algorithms. And I think also there's been a pretty big raft of levered traders that are being tapped on the shoulder and saying, hey, you're down 5%, you're out, and they're liquidating those positions. And that's why I think you see those big positions going down more than the market. So I think this pessimism will start to ebb a little bit next week as we get back to normal and there's more people around. But look, as long as growth expectations start to fall, it could be a tough market for a little while.
Okay, Morgan Creek Capital CEO Mark Yusko, thank you very much.
Thanks for having me.
Next, ZocDoc is officially a unicorn. I asked CEO Cyrus Massoumi where he plans to take the platform. And I'll be joined by the creator of an eSports phenomenon called League of Legends. In unicorn news, ZocDoc has closed its Series D funding round, raising $130 million at a $1.8 billion valuation. The digital health service, which lets patients book doctor appointments from a smartphone, says the latest round was led by investment firms Bailey Gifford and Atomico, with participation from Founders Fund and existing background. Here to tell us more is ZocDoc CEO Cyrus Massoumi. Welcome, Cyrus.
Thank you for having me.
Let's just start with today's news because this might be a day long remembered. How are you reacting to the epic decrease in stock prices today, and how do you think it affects ZocDoc?
Well, ZocDoc is a company that was started in 2007. Shortly after we started the company, of course, the Great Recession came about, and we had to deal with the realities of the capital markets being very constrained. And for us, it created a certain amount of discipline that's carried over to the company even to this day. And so we've been from the very beginning, the kind of company that's always focused on fundamentals and kept in mind that the problem that we're solving, which is healthcare, is a very real problem that's not going away irrespective of what the market does. And quite frankly, we are challenged with solving some very big, hairy problems that, quite frankly, are kind of acyclical.
And the first thing that you do so well is appointment bookings and allowing people to easily and sometimes urgently book appointments with healthcare providers. But now that you've raised $130 million, what other doors does it open for ZocDoc?
Well, of course, as part of this funding round, we want to add more patients and more doctors to the platform. But we absolutely want to fulfill our full vision, which is to be the digital center of care. And by that, I mean, we think that a patient is not just a patient when they're, of course, wearing a paper gown in a doctor's office. They're also a patient beforehand, of course, when they're trying to book their doctor, but when they're trying to understand their insurance benefits, or when they're trying to communicate with their doctor after the fact, or when they're trying to order the prescription refills. And so very much what we believe ZocDoc has the opportunity to do is to streamline and simplify the entire patient experience. And that's one of the things we're going to be focusing on with this fundraising.
Now, my sense is that healthcare insurers like United Health and others, see this as their territory and want to turn their websites into something more similar to ZocDoc. How much of a competitive threat are insurers posing to you guys?
That's like asking Jeff Bezos what kind of competitive threat Barnes & Noble had played to them back in the day. I think fundamentally, if I look at the landscape in healthcare in general, the shift to the consumer has not happened fast enough, and I think that's one of the big trends that ZocDoc is focused on, which is in every other industry in the country, we are used to getting our transportation immediately, our groceries immediately, our coffee immediately, but yet we're not getting our doctors immediately, and I think that's what we're hyper-focused on solving, and I think the insurance companies had their time to solve it, and they haven't, and ZocDoc's solving it now.
Okay, Cyrus, congratulations again on the funding. ZocDoc CEO Cyrus Massoumi, thanks so much.
Okay.
Well, if ZocDoc ever decides to go public, they may find themselves in the new mobile game Battle for Wall Street. It uses real-time market data to let users build and manage their own simulated trading firms. We sat down with its co-founder to discuss.
I think the best way to describe Battle for Wall Street is its heyday or Farmville meets stock market trading. The only difference with Battle for Wall Street is you're managing a trading firm, and you have to manage traders, and you have to trade real stocks, so we have real-time market data coming into the game, and you're trying to trade for P&L. So you start by trading equities, but the game also includes currencies and commodities and exchange-traded funds. We're going after the millennials, we're going after gamers, but we're also going after, again, new traders, the ones who want to learn about the market and have a very fun way to do that. I'd love to see this game become a key component for education. And so we're actually talking to a lot of schools, middle schools, high schools, and even colleges about incorporating the game into their financial classes. So we've tried to make learning the stock market a lot of fun by turning it into a really cool mobile game.
Coming up, 27 million players every day in sold-out stadiums around the world. We're talking about the gaming phenomenon that is League of Legends, ahead of a key tournament this weekend. And imagine riding an elevator that's 25 times higher than the world's tallest building. We'll bring that story next. And as we head to break, check out this video. The MIT Mediated Matter Lab used the foundations of 3D printing and applied them to glass production. The printer heats glass to a honey-like consistency before layering and building out shapes. It's time now for the Daily Bite, one number that tells a whole lot. Today's number is 12. Toth Technology has secured a patent for a 12-mile high space elevator. The structure will serve as a launch pad for rockets and will slash fuel usage by 30% compared to traditional rocket launches. In addition, the company says the elevator will be a major attraction for tourism, observation, and research. Toth believes it can build the elevator within 10 years at a cost of $5 billion. This weekend, Madison Square Garden hosts a sporting event like never before. It's the North American Championship of the League of Legends competitive gaming tournament, one of the most popular eSports games in the world. In fact, 27 million people play the game every day, and the World Championship final of this tournament drew more viewers last year than Game 6 of the 2015 NBA Finals. Riot Games, which is majority owned by Tencent, is the company behind the smash hit League of Legends. The company's VP of eSports, Dustin Beck, joins us now from New York. Hello, Dustin.
Hey, how's it going?
Good. So Madison Square Garden, closely associated with the Knicks, the Rangers, and now League of Legends. How important is it that you're staging it in this iconic stadium?
I think it's great for our fans, and it's great for our viewers all over the world to be able to host a event of this magnitude with our teams at Madison Square Garden, where people have kind of grown up, rooting for the teams that you just mentioned, and now they get to see esports played on the big level over there is really kind of a dream come true for our community, and I think you'll see the passion resonate throughout the crowd this weekend.
We just mentioned that the viewership for last year's finals in Seoul was larger than the NBA Finals Game 6. I think that's going to be incredible to a lot of people. Is this primarily an international audience or an Asian audience? I mean, how are you accounting for the enormous popularity of these games?
Yeah, what's great about our sport is it's actually truly global. So it's played everywhere from the U.S. to South America to all over Europe and all over Asia. And so the ability to have a sport that's really kind of enjoyed by our fans across the globe really impacts the viewership. So when we do turn on, it's not just one region watching, it's literally the globe watching. And with the global audience, you have people who are even rallying around, just like a World Cup where it's not going to be great in every time zone, but people stay up all hours of the night to tune in to go watch their favorite teams play.
Tell us a little bit about the athletes, if we're going to call them that are playing at Madison Square Garden this weekend. Who are you looking forward to seeing?
Well, it's we got lucky with how the season played out, and for the finals, it's really the Yankees versus the Red Sox of our sport. And these athletes, they're unbelievable. I mean, they've dedicated their career and their profession to playing games at the highest level. They live in gaming houses together. They play 12 to 14 hours a day, 6 days a week. They have coaches. They have weight trainers. They have everything that you'd expect with traditional sports. And so it's really kind of great to be able to see our players play on the global stage like this at a place like MSI.
That's awesome. So Amazon's Twitch TV division has obviously been a big source of e-games. YouTube is trying to get into that market with YouTube Games. Are these accelerators for your business, and who do you see kind of capturing the mind share when it comes to televised competitive gaming tournaments?
Yeah, it's a great question. We've seen esports really take off over the past couple of years with all the attention that's getting brought to esports. And, Twitch has been there from the beginning, and YouTube is about to launch YouTube Live, which is a really exciting platform for us. And really seeing these different players come out in addition to ESPN and other traditional sport carriers get excited about esports. It's great for us, it's great for the industry, it's great for our athletes, but most importantly, it's actually great for our fans because they love esports. It's bringing a level of legitimacy to the sport that they're most passionate about, and seeing kind of competition among the ranks for our broadcast platform has been really exciting for us to see.
So Dustin, last question. What does the winning team get this weekend?
Winning team's making some cash money, which is really nice to bank on, but more importantly, winning team's actually getting to qualify for Worlds. So this is only the North American tournament, but actually what it pans out into is our big global World Cup style tournament where 16 teams from around the world get to compete all of October throughout 4 different cities in Europe, and that's where they're playing for the $1 million prize pool. That's going to be really, really cool for them to play for.
And how much is that prize money this weekend?
This weekend, it's a couple $100,000.
Excellent. All right, looking forward to watching. Dustin Beck, VP of eSports at Riot Games, thank you.
Thanks a lot.
That does it for this edition of Bloomberg West. Emily Chang is back on Monday. Have a great weekend.